Good morning, everyone. I'm Vince Lansing. This is the Gold Fix Market Rundown. There's my top secret notes. All right. Uh, Two things to talk about today. We want to watch Japanese bonds closely. So far, so good, but you got to be careful. And I want to give you a little preview of a post that's going out today about the bond vigilantes, which we identified as back in December of 23. And pleasantly surprised, they're back again after taking profits this year. Bond vigilantes are macro discretionary, in case you're wondering. Okay, so let's start with the markets. There's the homepage. 10-year yields are down 2. The dollar is 98.29, up 13. S&P 500 64.54, up 4. The VIX is down 1630 trading now. Gold is down 11, was down as low as spot 35.11, I think. So we're well off the lows, but we're down on the night. We're going to talk about that, especially for the Goldfix chat people. Silver 40.99, 40.98. It's crazy to say that. Down 11. Copper 447, down 5.5. Okay, silver's holding up. WTI down again, down 45 cents. 63.75. Natural gas up again, 3.5 cents. Bitcoin down 700 and change. Ethereum down 41. Palladium, platinum down. Gold, silver stable. And grains weak, with wheat taking it on the chin again. Okay. Topics. What did I say they were? We're going to watch Japanese bonds for the next $50 move in gold. We just had a $50 move in gold. We're going to watch Japanese bonds continuously for the next $50 moves between now and Fed Day, which is September 17th. Payrolls are tomorrow. We'll talk about that for a little bit as well. The other thing we're going to talk about is the bond vigilantes. Macro discretionary has returned, and you heard me talking about that. And I was trying to figure out why they returned. And now I know why. So we'll talk about that at the end. Here we are. So again, we'll talk about that now. Bond vigilantes have returned, with gold once again tied to global debt markets after years of disconnection. Liquidity stress, falling reserve repo balances, something Zero Hedge has focused on. As the reserve repo balance drops, liquidity dries up. As liquidity dries up, the bond market gets a little more fragile. These are explanations, not necessarily the only reason. And that makes people a little bit nervous. And so they'll pull their money out of bonds and into cash. And gold is being viewed as cash now, which is good. Japan's fragility, their government-controlled bond market, is the other central driver right now. We'll show that later on. The increasing correlation between Japanese bonds and gold serves as proof of their reemergence. And that story there is an old story from December of 23. In December of 23, we identified a spike and a cap by the BIS, and then the market traded sideways for 2 months. And during that time, before that started, we said, this is the bond, guys. Bond macro discretionary funds, biggest funds in the world, are playing. And we were right. We just had to wait 2 months for them to step in. And so now the pieces are fitting together, folks. We capped in April. We traded sideways for 4 months. I'm not married to this, but it's getting pretty eerie. The bond market's cracking globally. Japan at the forefront. Time has gone by after a cap, and now the macro discretionary, my heroes this year, are back in, and they buy dips. That's why I missed that the other day. Anyway, but for now, investors should watch for a heavy-handed Japanese intervention or Fed easing. Both could create short-term volatility, bearish volatility. Let's not use that stupid word there, but tactically, dips in gold tied to bond adjustments will offer choices. Do you want to buy them, or do you want to take profits? Entirely up to you. That will be in a post tentatively titled Must Read Bond Vigilantes Are Gold Bugs Now. That goes through where we are now, how the Japanese bond market and bond markets in general have tied to gold again, and how the bond vigilantes have adopted gold as their new child, as their new way to express frustration, and what should happen next. Related post yesterday, geopolitics, China may be active in US gold. We're seeing a convergence. China got active in gold in March of 24, and China's active in gold now, and history is repeating so far. Gold fix PM, BRICS on parade, the new axis of evil, which is what Trump is trying to frame it as, um, did a military parade. I'm sure Donald was jealous because he wants to have his own big parade. And well, it just shows that we're being challenged and we're not really doing anything about it. Founders, why a 50 basis point cut should already be under discussion. Um, we're going to put out a version of that to premium later on today or tomorrow, but before the non-farm payrolls. But it's a very good dissection, not just of why 50 basis points should be cut, but the bank that we're in question here, they give a good breakdown of why the BLS numbers suck and why they're no good and why the Fed's probably not looking at those numbers anymore. Gold breaks 3,500 as macro buyers step in. China's military parade, yada, yada. Founders AM, Chinese snowball. That's a comment on the equity markets. Data on deck today it's 8:28 right now, so it's going to come out. Thursday, PMI and speakers going to come out. I would make another, always making hat tips to zero hedge, but it's relevant. I mean, these guys they're macro analysts. Job openings came out yesterday and they were very weak. Um, and I think the paraphrasing them, the phrase was, we haven't had a recession unless job openings went to X, and job openings went to X. So if you want to call jobs an obstacle to a recession, because they have been for the last year or two, well, that may have cracked. That may be a warning of what's going to happen tomorrow. So that's an interesting sign. Today, again, is PMI speakers. Tomorrow is U.S. unemployment report. Touch on that for a second right here. The number, if you're looking for magic numbers, is 75,000. The market seems to think 75,000. A couple banks are below. Most banks are on it. So the mean is 75. Most banks are clustered behind that. But a couple of the banks are lower. I think Goldman is one of them and Standard Charter is another. Uh, and the banks that are below 75 are calling for a higher chance of a 50 basis point rate cut because they believe that the revisions, which are going to come even later, September 9th, are going to weigh really heavily on the Fed's decision. So again, there's the calendar. September 5th is tomorrow. September 9th is the revisions. Again, hat tip to zero hedge on that. September 10th, PPI, 11th, CPI, and September 17th, the Fed makes an announcement, 0, 25, or 50 basis points. Who knows? But that's it. Let's go to the Japanese stuff. Now, this is the weekly marketeer had been paying attention to this. We want to elaborate a little bit on it. I used to trade the yen against the dollar against gold overnight, and it was a grinding type of a trade. And there were moments where it would not make money. I was trading the correlation. When the dollar is stronger, I would sell gold and I would buy yen. I would do all kinds of goofy things. But it was all micro trading. However, every so often I would really lose money. And it wouldn't make sense because the yen would weaken and the dollar would strengthen and gold would go down in dollar terms. You would think, right? No, gold would go up in dollar terms. And those were the nights that I would lose money. And those nights were the nights when uh, I had to be educated. And that education goes like this. Well, Vince, sometimes the Japanese, when the weak currency weakens, they buy dollars and they buy gold. They really don't give a shit. They hate the yen. And so these type of things show you that people worry about their own currency when it's getting weak. It's not just about dollars. So that in mind, take a look at this chart from, let me shrink this a little bit here. From 23 to now, most of the time, the yellow line, that's the gold market, is below the yield, the way I've scaled it. So it correlates, but it's loose. It goes above, it goes below, sometimes diverges. But I'd say you could say starting in February of this year, starting in 25, gold started to consistently outperform or be above the trend of the Japanese bond yield, even as that bond yield accelerated. And then starting in, say, July, you started to see a very snap, like it snapped very tight, the correlation. So bond vigilantes are buying gold. And the bond vigilantes are basically reverse carry trading. They're shorting Japanese bonds and they're buying gold with it. It's crazy, but we could be in that kind of an era. Anyway, the reason I bring this up as the backdrop is because when you go to a daily, I'm not sure the daily will render properly. Yeah, when you go to a daily, it kind of renders a little bit goofy. Let me see if I can fix that. So when you go to a daily, just know that for this time period, this is the strong tracking. Japan is the point of the spear. So I'm just talking to you short term. This is an all-time high for Japanese bonds, and it gapped up. And whenever the bond market or the currency market gaps, Japan at some point does something heavy-handed, ham-fisted, and sloppy to show who's boss. And they may have done that this morning. Look at this day here. That's a big wick, right? Okay, so they may have to do it again and again. So I'll give you an idea. Let's look at the hourly on the Japanese bond. The Japanese bond, let's go to the 4 hour, give you a little more perspective. Japanese bond yields, right? Going higher in the 4 hour, makes a new high yesterday, gets slammed today. Slam. That's a slam. Fills the gap, if you want to look at it that way, and now starts to bounce again. So what did gold do? Didn't gap, but makes a high, gets slammed down to, I think, 35.11, I said, right? 35.10, 42, at least on this CFD type of chart, and bounces. So what do we know about what happened to gold this morning? Well, here's the story. It got slammed in sympathy with the Japanese bond yields coming off. Somebody bought it. Again, macro discretionary, bond vigilantes. And now it's creeping higher. This is likely algo behavior. Now, does that mean the low is in? I'm always going to say no, it doesn't mean the low is in. It does mean that gold is tracking the Japanese government bonds. So if you're saying, why is gold down? Just look at that, and there's your answer. That'll calm you down as we head towards the event. I believe as we head towards the event, gold will be bought on dips, headed the event meaning the Fed decision. Gold will be bought on dips at various levels. And then after the Fed decision, we'll have to see. It's a crapshoot, but they probably will buy it more. I would have to say that if you're bullish, like these macro discretionary guys are, you're looking at any time the Japanese government knocks the bond yield down as an opportunity to buy gold because it'll create a dip. And the reason you think that is because the Japanese government bond is higher because of lack of liquidity and inflation at the same time. The cure for higher bond yields, believe it or not, is going to be printing more money. So they're going to keep a lid on their bond yields, which is like yield curve control, and then they're going to let their currency weaken, and all the currencies are going to weaken. So gold is a macro discretionary trade now. A year from now, gold will be much higher, they think. 2 weeks from now, gold could be a lot lower. And I'm saying that for the chat people. I know that you're looking at things and you're looking for reasons or rationales for why it's doing what it's doing. That's why it's doing what it's doing. As to silver, yesterday I mentioned in the chat, I said, look, silver was leading in the morning and then it followed in the afternoon. I think what happened is gold made a high, silver made a high at 10:30, looked really strong, got slammed, got capped. And then I think people started to look at silver and say, wait a minute, copper's weak, oil's weak. Let's sell our silver and get into gold. And you saw gold make new highs as silver kind of languished a little bit. Anyway, so that's a micro comment. The macro comment is the big boys think it's going to go higher. So that's it. I'm Vince. Have a great day.